Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to use options in order for you to retire early. And yes, it can be done. I will go ahead and show you a realistic outlook that anyone can follow if they want to retire from their regular 9 to 5. Now, if you're not able to retire, then you could still watch this video because it will show you how to make some additional income in order to supplement your already 9 to 5. So, if you're new to options, you definitely stumbled onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you one simple option strategy that you can use if you want to retire using options trading. It's going to be a sell option strategy, so you don't have to worry about the high risk. Now, not sure if you guys are familiar with this channel, but we like to give you a step-by-step walkthrough in order for you to be able to follow along with us. And if you so choose, you could be able to try this with your own portfolio. Now, before we continue with the video, there's always two requirements I have for my viewers and also my subscribers. Requirement number one, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure you have an exit strategy before entering any trade. That way, if the trade do decide to go against you, you're able to get out of the trade. That being said, let's go ahead and get down and dirty with options. Now, for today's video, we're going to be using United Health, and that ticker is going to be UNH. So, for those of you wanting to retire early or want to use options in order to make some additional income, this is what you do. We're going to go to trade UNH options down to the bottom. And what that's going to do, that's going to open up our option chain. The option chain is going to be all this information down here. And what this information does is that it helps us make a very informed decision of whatever option strategy that we want to do. Now, what we're going to do now, we're going to go ahead to buy and we're going to go ahead to call and we're going to choose a strike date. Remember, before I even go ahead and do this option strategy, I already did my own due diligence, so I know what I'm doing. So we're going to go ahead and choose a strike date, and the strike date we're going to be using is going to be the June 18th, 2026. Now, the June 18th, 2026 is going to give us 365 days to expiration, or pretty much 1 year. Now, you do not have to go to June 18th. You could pretty much choose any strike date you want, and that's also going to depend on the amount of capital you have in your portfolio. So, for instance, you could go ahead to choose the March, which gives you 275 days to expiration. You could even choose the December 19th. But remember, just make sure to do your due diligence, and that's going to help you with choosing your correct strike date. Now that we have buy and we have call and we have 1 year to expiration, this is what I'm going to do. I'm going to go ahead, I'm going to go below my current share price, and I'm going to choose a strike price of $300. Now, why am I choosing the $300? Once again, I already did my own due diligence, so I know $300 is a very good strike price in order for this strategy to work in my favor. Now, I'm going to go ahead and click into that. Now, this here is a buy call, so we're going to have to pay. The amount we're going to have to pay is going to be 57.75, or it's going to be around 5,775. Now, the reason why the price is changing is, as of making this video, the stock market is actually open. So bear with me. Now, this is a long-term investment. When I start off my videos, I usually say investors and future investors. Anyone that goes ahead and buys any option strategy for a year and beyond, that person is definitely an investor. Now, we are buying this option strategy with the intention of it making us consistent income until expiration date comes, and I will show you that shortly. Now, this option strategy is known as a long call option strategy or a LEAPS option strategy. LEAPS is an acronym that stands for Long-Term Equity Anticipation Security. So, step one, if you want to use options to retire, please go out there and find LEAPS option. Once again, do your own due diligence to choose the right stock. So now we're going to be paying around $5,800 in order to acquire this LEAPS option in our portfolio. Now we have this leaps option in our portfolio. Now we're going to go ahead and we're going to try to make consistent income. That consistent income is what's going to make sure we get paid on a regular every 2 weeks or every month. That's going to depend on your outlook, and I'm going to show you that as well. So now we have this leaps option in our portfolio. Now we're going to go ahead and make consistent income. And for that, we're going to go to sell. We're going to go to call, and now we're going to choose our expiration date. Now the expiration date I will be going with is going to be, let's go with July 3rd, and that gives us 15 days to expiration. Now I'm going to go ahead and choose a strike price, and the strike price I'm going to be using is going to be higher than the price I use for me to buy my leaps option. Remember, I use the $300 strike price. So I'm going to choose a price above that. And in order to make this trade work even more in your favor, it's better if you choose the new strike price above the current share price. So you could go ahead and choose it above your $300, which is the strike price for your leaps option. But to be even safer, choose it above the current share price. So let's go ahead and we're going to go up and select the strike price. Well, what do you know? As you can see, I'm already doing this option strategy. So there you have it. So the strike price I chose is $325, and then I'm going to get paid for that. If I were to do this strategy right now, I would be paid around $280, or in option terms, that's going to be $2.80. You need to multiply your $2.80 by 100 shares because each option contract does have 100 shares. So every 2 weeks, you're going to stand to make $280. Now, when I did this option strategy, I obviously got way more than $280. I will go into the actual trade and show you how this works out. I'm also going to show you how to get out of this trade in order for you to continually keep making money. Now, $280 is not a lot, but remember, we're using one leaps option. In order for you to scale up and make enough money for you to retire, you need to fund your account portfolio in order for you to be able to purchase more than one leaps. Here's an extra tip for you. If you're going to be able to use leaps option in order for you to retire, please do not buy multiple leaps of the exact same stock. Make sure to diversify by stock, or make sure to diversify by sector. So now this new option strategy is going to be the covered call option strategy. Whenever you have a leaps option in your portfolio, then you use that leaps option as collateral in order for you to go ahead and sell covered calls to make consistent income. That new option strategy is known as the PMCC, or the poor man's covered call. The poor man's covered call has been helping people retire since before I was born, and it can work for you as well. So make sure to practice this option strategy. Start off small and then you could scale up. Make sure to have an investing mindset, not a trading mindset. An investing mindset is going to put you on the right path, and it's going to show you how to make money right now by making long-term investments way out beyond a year or more. Now, let's go ahead and go into the actual trade I have, and I'm going to show you how to exit this trade in order for you to continuously making income. Okay, so here we are on the actual trade, and this is the sell call. This is the covered call aspect of the trade, and the strike price is 325. Now let's go down. I'm going to give you the details. Now this is how you use this option strategy to retire. So when I did this trade, I actually received $345. The date I did this trade was 6/17. The expiration date was 7/3. That's about a 2-week span. So in a 2-week span, you stand to gain $345. Now, once again, remember, if you need to retire, you're going to need to scale up. I don't think $345 every 2 weeks is going to help anyone retire unless you really living way below your means. And that's going to be freaking awesome. Now, when you do these option strategies, the most important thing you need to remember is to lock in your investment gains. The name of this channel is Investment Gains, and there's a reason for that. When you do these trades, what you're looking for is these right here. You don't need to look at these trades every single day, but you could monitor it every week or close to expiration date. Now, with this option strategy, no matter how the trade goes, this money is yours to keep. What I'm trying to show you now is how to lock in your investment gains. So for instance, right now, I'm up 15% or $54. If I wanted to, I could close this trade right now and lock in that $50. that $50 is going to be secured in my pocket. It is always better for you to have secured money in your pocket than for you to be waiting for expiration when you don't know what's going to happen. Once you close the trade now you're able to go ahead and do this exact same option strategy to make continuous money. Remember, lock in those investment gains and go ahead and do the option strategy again. Remember to change your strike prices based on what the market is giving you. Now, investors and future investors, that is how you use options in order for you to retire. You're going to go ahead and you're going to choose any option strategy you want, but just make sure it's an income generating option strategy. So you're going to be getting money over and over and over. One income option strategy that I use in my portfolio that allows me to travel and have money is the PMCC. The PMCC involves you going out there and buy a leaps option and then using that leaps option in order to sell consistent covered calls to get consistent income. And that is how you grow your portfolio. If you guys have any questions about any of these strategies we mentioned in this video, which is going to be the leaps option strategy, the covered call option strategy, or the PMCC option strategy, then let me know in the comments below. I do offer one-on-one coaching, so if you guys need any help with options trading, that link is going to be in the description below. Now, go ahead, like the video, subscribe to the channel, hit the notification bell to get an alert when I post a video. But here is the most important thing. The reason why I make these videos is that I'm trying to help as many people as I possibly can get away from that 9 to 5 by making income with options trading. So if there's anyone out there you know struggling to grow a small account portfolio, the right thing to do is to go ahead and share this video with them. Now, until the next video, keep pushing your investments.